Welcome to Upticks. I'm Jake Falcon, the founder of Falcon Wealth Advisors and your host of Upticks. Today's episode 181, Tax Planning with Jake Cross. Jake, thank you for joining me on the show.
Yes, thanks for having me, Jake. Appreciate it.
This is your world debut. Are you nervous?
Of course not. We're here to talk about tax planning. It's one of my favorite things.
That's good. Good. And hopefully we can liven up the tax planning conversation, because I know for a lot of people, when we bring up taxes, their eyes kind of glaze over and they get bored by it pretty quickly. Unless you're a CPA watching this, and then I'm sure you take offense to that.
Right. Well, and here's the thing about taxes. I mean, the tax code itself can be pretty complex. So, a lot of people shy away, and I get it. It's not an easy topic. So that's why we're here to help.
Yeah, absolutely. Absolutely. But before we go into some of the tax planning strategies we've been deploying for our clients, since this is your world debut, I wanted to introduce you to our audience. And maybe why don't you go into your background a little bit as far as kind of where you grew up, where you went to school, and why you got into financial planning to begin with.
Sure. Yeah. So I grew up local, grew up in Overland Park, Kansas, all my life. I've lived there. And I went to KU. I studied finance and business analytics there. And shortly after graduation, I worked at another financial planning firm locally. And about 5 months ago, Jake, you gave me the opportunity to come here work with the team at Falcon Wealth Advisors. And so been here loving that. The reason why I got into financial planning, and this is, it's a pretty cheesy answer, but really if I can de-stress someone's life in terms of their financial situation, that truly brings me happiness. And so, it's not an 8 to 5, right? It's a career, and it's something I enjoy and love doing every day. So I'm very fortunate to be in this situation.
I like that. And I don't think it's cheesy at all, Jake. I think de-stressing, I don't use that word, but I like that a lot. It's, a big thing that we talk about is we solve our clients' financial problems. And a lot of that does create anxiety and stress. And so you're right. If you're getting satisfaction from that, and so do I. And also you got a great name. We got two Jakes here to make it nice and confusing.
Right.
Have you gotten a lot of that yet from clients? Do they get confused or no?
They have, yes, and it's understandable, but not too much, but I definitely have gotten it.
Right. So you got two Jakes, we've got Matthews, we've got Abby's, we got it all covered. So multiple names all the way around the team. Now, the financial planning group as a whole is actually something somewhat new to our organization. And so, Jake, why don't you go into a little bit of what your role is on our team with our clients and how that group is set up?
Sure, yeah. So there's about 4 folks in our financial planning group, and how it boils down is, and Jake said this before, but it's an ensemble practice. And so me and Matthew Tomlin in the group, we mainly work with Jake and his clients, but we can also help Corey and his clients as well. So if one of us is out or one of us is helping another client, the other one can step in. And we think that's simply just more efficient for the client and a better client experience. So they don't have to wait on someone. And so, like I mentioned, we mainly work with Jake's clients, me and Matthew Tomlin. And, we're really there to support Jake and help the client. So we'll dive deep into the technical analysis side of things for financial planning, while Jake is there to give the overarching advice to our clients, so we can dive deep into the nitty-gritty things with them.
Yeah, that's perfect, Jake. Yeah, and it's a true partnership. And so, the old school way is every single thing would come through me on the client. So any little question about their plan, any little question about their performance, the asset allocation, all that stuff came through me, which I love doing. And I still do a lot of that today. But the reality, if our mission is to ultimately serve our clientele, our niche market, which is typically executives that have worked at a publicly traded company, people in their 50s approaching retirement. If that's our niche, in order to serve more of those people, we needed to build out this ensemble practice. And so, Jake, you and Matthew are, like you said, you're basically extensions of me. You're licensed advisors. So you obviously know what you're talking about. Sure, I've got a little bit more experience, so that's why some of the overarching strategy and advice still comes from me. But you guys are completely capable of giving clients day-to-day advice and certainly interpreting their plan. And in fact, when things do get even more complicated, I lean on you guys even more because you have the time and the capacity to go research some topics a little bit deeper than I may have. So that's awesome. Not to leave out Joe and Alyssa. Joe and Alyssa are great. Like you mentioned, they work with Corey primarily and his clients. So kind of we're all together though. Like you said, Jake will talk to any client, and I'll talk to any client for that matter, and so will Corey and his group. But because financial advice is so personal, we found that it made sense, Jake, for you and Matthew to join me and my clients so that we can have that personal conversation and that relationship and get a little bit deeper than you just kind of helping every single client in here.
Right. And I agree. I mean, I think clients want consistency as well. And so, me and Matthew are going to be, the main faces and voices that they hear and see alongside you, but it does help knowing that other team members can step in and they're just as qualified and capable to do things that we're doing for them as well.
Yeah, that's perfect. And it's working out really well. And so normally you or Matthew will actually join me in my meetings. You guys are also taking meetings with clients directly if it's something that definitely you can advise on. And so that's been a lot of fun. And we're going to continue to ramp that up and do more of that. But it's good for clients to know that now instead of just me, they've got a group, me, you, and Matthew all servicing them on their financial advice, which is really a powerful thing.
Right.
All right, good. So for today's topic, though, we wanted to talk about tax planning, the 3-letter word that many people think should be a 4-letter word. And so, like you mentioned, it can be extremely de-stressing and impactful when your actual wealth advisor looks at your tax situation and doesn't give you tax advice. So I don't want to cross the line here because my compliance will get upset with that. So again, we're not filing your taxes and we are not tax advisors, but we do tax planning, which I have found many CPAs do not do. And so you could think of your CPA as rear view looking. They're always going to tell you, well, based on what you did for 2021, this is what you owe. What we're looking to do at Falcon Wealth Advisors is saying, okay, for what we want to do in 2022, how does that impact your plan? And Jake, maybe you can go into our new tax planning process that we're rolling out for our clients.
Sure. Yeah. So we have a brand new tax software, tax planning software that we invested in. And really, it's very easy to use in terms of all the client needs to send us is a PDF of their tax return, and we can scan it and upload it into the software. And what's super unique about it is it does 2 main functions really well. So the first overarching function is it'll spit out simply just a key figure, 1-page, 2-page report that shows all those key financial figures in your tax world. So it'll show what your AGI was, what your MAGI was. It'll show what marginal tax bracket you're in. It'll show the average tax. It's different than effective tax. It'll show, if you have any losses that you're carrying forward, all those different types of, I call them tax levers that impact your situation. So, and then the second function is going to be a what if scenario. So similar to our overall financial planning software, we can create what ifs and we can model out certain situations, which one key thing that I think is super cool with the software, and that's pretty relevant in today's time, if there's a tax proposal that's going out, the software knows that, and we can actually use those tax proposal numbers and use what ifs around it. So it's super cool. And I think especially right now, it's super helpful.
Yeah, that's a good point. You bring up 2 very good points. So you're right. So I love the overarching summary of your AGI or your adjusted gross income, and then it takes down all these observations. And then you're absolutely right with these what ifs. And many of our clients are faced this year with a potential tender offer on their stock. So if you're getting ready to have a huge liquidity event and have to sell a lot of stock and realize a lot of gains, that's who this software is for, because we can run these what ifs and see what else can we do in 2022 to mitigate some of that liability. Now, for 2021, I don't know, Jake, what is it, like 99% of the tax deals? The only thing I can think of is you could make an IRA or Roth IRA contribution up until April 15th. SEP IRAs, if you're self-employed, you can still do that. But most of your 2021 taxes are done, right? There's nothing other than that. I mean, I don't think is there anything else that you can think of that someone could do to help their 2021 situation?
No, that about sums it up. I mean, with individuals, I mean, you are a little bit limited, obviously. So just doing, your contributions, catching up, things like that, that's about it for now.
Right. So what we're really talking about, though, is once you file in 2021, because it's due in April, right? So once you get that return, Jake and Matthew on my team and Joe and Alyssa on Corey's would love for you to upload your tax return. And we use our financial planning software portal is called eMoney. That's where you would upload it. Don't email it, right? Because it's got a lot of your personal information and we don't want it to get hacked. So you would upload it securely onto your financial planning portal. Then you just give us a heads up, say, hey, Jake and Matthew, I uploaded it. They'll grab it. And there's no additional charge, by the way, to do this. They'll grab that file and then start running this analysis on it for you now in April or May or June, whenever you get your taxes filed, and start crunching those numbers and have a separate meeting, whether it's via Zoom or on the phone or in person, to talk about your taxes. And they'll give you the nice report and say, hey, this is our observations. These are some tax planning opportunities. And then again, we can run some what if scenarios if you've got a specific question that needs to be addressed.
Right. And I think what's another great point about this is, we're not here to replace your CPA. We're really here to add value to your relationship with your CPA. So in the first functionality, if you just simply want the key summary page with some observations of things you could potentially do, and if you want to take that to your CPA and get certain ideas, perfect. Have the CPA sign off on it. We can help execute things if it deals with us, and you're set. Another great thing is for the second functionality with the what if scenarios, we can have, for example, Roth conversions are super popular. But unfortunately, I think a lot of advisors just convert a blank dollar amount and they don't really know the true tax impact. What's crazy about taxes is that all these different tax things like, your capital gains, ordinary income rates, all those different taxes, they're all connected, right? And so what's great about the software is we'll put in a certain scenario of, if we want to convert blank amount of dollars, what is the true tax impact? It's going to tell us, well, if you convert, $1,000 more, your capital gains rate is going to go to the next bracket, or your Medicare premiums are going to get adjusted and increased. And that could be super impactful, right? A lot of folks just think about, okay, I'm going to convert 20,000 and there's going to be blank taxes on that. Well, what about all the other tax codes, right? So it's you got to take everything into account. And this is being truly comprehensive. I know a lot of people want to throw around being holistic or comprehensive, but this is truly being comprehensive. You got to take everything into account.
Right. And frankly, I think you're right. I think most advisors, they just ballpark it, or they have to count on the client being extremely accurate with their assumptions or their returns, which no fault to the client, but a lot of them just frankly aren't, right? And so by getting your official tax return, we can actually give you some good tax planning recommendations based on that. And again, good point on the CPA, get them to sign off on it. Obviously, they are the true tax advisor. They're the ones that are going to be filing all of this stuff. But you're right. In fact, we've paused on doing Roth conversions for clients until we can see their tax return, because we feel like in order to give you proper advice, we want to have that comprehensive look at your situation before we can say do 20,000 or 80,000 or whatever it is for a conversion. Let's talk about what that is real quick. So Roth conversions, like you said, are very popular right now. And the reason is the taxes are probably going to go up. And as people get older, they're starting to realize that if you have all of your money in an IRA, a traditional IRA with pre-tax dollars, when you turn 72 years old, the IRS is going to force you to pull a required minimum distribution out of that account. And if you have $2 million in your IRA at that time, the approximate amount that you'd have to pull is 80 grand. And you might not even need to pull $80,000 out, but they're going to make you pull it and pay taxes on it. In fact, as you get older, they make you pull more and more and more. So for many of our clients, unfortunately, Roth IRAs weren't nearly as popular when they were saving for retirement. And so now is the opportune time to take some of that money while they're in their 50s and 60s, pay some taxes on it now, and move it into a Roth IRA, which grows tax-free, so that when they do turn 72, they aren't forced to pull money out. And if they do need the money later in life, like I mentioned, it comes out tax-free.
Well, I think it's huge because like I mentioned before, if someone has, let's say an RMD and it gets increasingly bigger and they're taking funds out of their IRA because they have to, well, that's going to be tax ordinary income rates. That's going to be income that they're getting in, they have to take. So what's crazy, like I mentioned, that all the different taxes are connected. And so, eventually if they go into a certain income threshold, well, there's, their Medicare premiums are going to go up. All these different taxes are going to go up, and it's not something you can really control unless you do tax planning before, right? Like you mentioned before, generally people will file taxes and they're just looking, the past 12 months, but what tax planning is, what can we do today so we can save ourselves a lot of money and not overpay taxes in the future?
Exactly. And again, that's my little bit of my pet peeve with CPAs is I think they're very focused on 12-month cycles, and they're trying to just lower your return today when we look at 30 years when we're looking at our projections. So again, that's just the financial planning profession. I think almost all planners are projecting things out and planning things. Just like when you hear us talk about saving in your 401k and compounding your investments, well, your taxes can compound too, right? So you want to be careful that you don't let your tax liability compound. You want to keep that steady or lower it, is what we're getting at here. So if we can compound and grow your assets while keeping your taxes the same or lower, then to us, that's adding an extreme amount of value that frankly, not a lot of financial advisors do. And certainly your CPA probably isn't going to do. And that's again, why people come to Falcon Wealth Advisors, because we truly are managing that wealth and that financial plan and that trajectory on that. And not to only mention, helping you as an individual, but for your kids, right? And your grandkids, because the IRA rules have changed. It's probably been a couple of years since the law passed, but you used to be able to pass down an IRA and your kids would be able to pull out from that account over their lifetime. Well, now the new rule, and there's some intricacies with the rule, but generally speaking, if you leave your money to somebody that's 10 years away from your age, typically your kids, obviously, they are going to be forced to have to empty that account in 10 years, which can be very burdensome on them from a tax standpoint. And again, if you had it in a Roth, they still may need to empty that account in 10 years, but it'll be tax-free. So there's two things. So not only could it help your tax situation, it could also help your estate, right? And your legacy. And so that's why it's actually even more important, especially people that get into $2, $3, $4, $5 million area. You're talking about generational wealth, and you could literally save thousands and thousands of dollars just by doing some planning up front, which is what we do.
And I think in terms of estate planning, I mean, again, we don't create trust, things like that, but we'll help advise on them. And it's super overlooked, in my opinion. I don't think a lot of advisors understand estate planning as a whole, or they just simply don't want to get involved with it. But if you can plan with an estate planning attorney, create those different types of trusts that are going to help move one generation of wealth to the next, it's going to be super beneficial. I mean, the estate tax itself is 40%, right? So, and again, the tax exemptions are being proposed to decrease. Will they? Probably, who knows? I mean, time will tell. But if we can plan for those things, we're going to save a lot of money potentially on taxes.
Right. So again, and then we're not trying to replace your attorney either, right? So what the idea is that we pull these other professionals and we bring it all together. And since we are doing a lot of the projections and the planning that's where we can align with your estate planning attorney and your CPA and help quarterback that process so that everything is set up and well-rounded and working together. And that's what, again, our new tax planning software, that just really got us to a whole nother level on tax planning that frankly, we weren't doing before. And like I said, most advisors don't do. And so now that we've got this added value to our clients at no extra charge, I think it's a huge game changer, and it's bringing our practice to another level. And frankly, it's just it's allowing us to give a deeper level of advice, which is fantastic.
Yep, I exactly agree. And really, so I guess for all current clients and all prospective clients, if you want, please send us your tax return, at least for us to have on hand. And so just in case if we want to do any tax planning strategies, anything like a Roth conversion, we want to make sure we have that return so we can have accurate data and make sure that, again, if we pull one lever down by doing a Roth conversion, not all these other tax levers, I call it, are going to go up, right? So we want to make sure that we're using your tax return and we have accurate numbers.
Right. Really good point, Jake. And again, all that can get uploaded right into your financial planning software. And by the way, with our financial planning software, we've also updated that as well, where you have 24 access now to your financial plan. And in fact, you can toggle your goals a little bit. You can't get the full access that we have on our end, but you can toggle little things like if I retire sooner or I want to spend more money. And you can do that at 2:00 in the morning if you want to look at it. And then obviously email or call us or set up a meeting if you want to go into a deeper conversation. But what's neat about that is I think clients want to have access to their plan and to look at it and maybe make adjustments. So that's, again, all part of that planning software that we continue to build out and offer to our clients. Good. Is there anything else, Jake, that we missed before we wrap up here?
Nope, I think that's it. Just to reiterate, tax planning is huge. If you're not doing it, please do it. It adds a tremendous amount of value. Maybe not so much, in intra-year, but for years later on, you're going to be thankful that you did it. So when you look back, so if it's interests you, just let us know. You can send us an email, and we can take you through our tax planning process and our overall financial planning process too.
Right. Perfect. Yeah. Thank you, Jake. And so before we get into our fun topics, you're not off the hook yet. Before we get into our fun topics, Jake, just quick plug. Thank you so much for tuning into Upticks. The best way to not miss an episode is to subscribe. If you're watching this on LinkedIn or listening to it on your favorite podcast platform, a thumbs up or 5-star rating is certainly greatly appreciated. I'm out there on 4 social media platforms. So I'm on Twitter, Instagram, Facebook, and LinkedIn. And if you have any questions for me, certainly you can email me at jake@falconwealthadvisors.com. Now, I'm sorry, Jake at falconwealthadvisors.com was already taken. So what email address do you have?
Yep, mine is Cross, CROSS @falconwealthadvisors.com. It is my last name. Jake took my first name.
And I know you're out there and you do post on social media as well. So LinkedIn is probably your best place to connect with you.
Yeah, I'm definitely most active on LinkedIn. I have Facebook and things like that, but I don't generally use it for professional things. So LinkedIn is definitely my most active social media platform.
Yeah, perfect. Yeah, feel free if you're not connected with Jake to do so, because he does post some good information on LinkedIn as well if you're on LinkedIn already. Now, as far as our fun topics, usually this time I bring guests on to talk about any books, TV shows, movies, sporting events. Is there anything top of mind? I know you're a reader. Have you been reading anything recently or anything you want to share?
Yeah, I mean, right now, I do love reading. I'm going to be honest, I haven't diving deep into a book recently, but a lot of podcasts. So, just along this topic here, a lot of tax planning podcasts I've been listening to. Michael Kitces is a great resource as well. He's a big educator in terms of financial planning, really all things financial planning. So I've been listening to a lot of things like that, but not a ton of books recently.
Yeah, I'm reading this book called Conscious Leadership by the CEO of Whole Foods, which is pretty good. And you know what's crazy that they do there? And I was talking to somebody else about this, but at Whole Foods, it is public information, I guess within the company public, that they disclose what everybody's making in the whole company. So you could look it up. So I was just curious, how do you feel about that? Do you think you would like that at Falcon Wealth Advisors if you knew what everybody was making? I think that's weird.
Yeah, I mean, I don't personally think that I would like that, and there's pros and cons to it. I mean, like let's say you have a counterpart and you know that they might be making more than you. Is that going to really help foster a good relationship? I don't think money should be a big driver of any relationship, obviously. But I think it's human nature that, you know, it might be, you might subconsciously be thinking about it. So I don't think it should be public. That's my personal opinion. What do you think?
Yeah, the same. I think it would just create it would create unnecessary drama and animosity when you're right. I mean, it's I mean, ultimately, at least the Falcon Wealth Advisors, I mean, we value everybody on our team. We've got a partnership offering for 5 years, which I think is really where everybody should be striving for anyways. Once we're all partners, that won't matter nearly as much. But um, I look at it very seriously though when I am onboarding new people and adjusting people's pay, because I do 100% believe it needs to be equitable, but I don't think it needs to be publicized, because again, it's just gonna discourage. I don't think there's anything good that can come from it. So now, but somebody pointed out, I was talking to this about, they're like, yeah, but if you're paying every one of the checkers the same rate and you say you publicize it, then what does it matter, right? So I guess the argument is that maybe the salaries aren't all different there, and so that's why they feel like they can. I don't know. So
Right. I feel like it boils down to, do you trust the person that's hiring you that they're
right,
giving you an accurate and fair pay or not? I
right,
mean, I think it comes down to trust, right? So,
yeah, exactly. Good point. That's a good point. So I thought, but other than that, it's actually a really good book. He talks a lot about providing value for everybody, not just the clients, but for the employees and for the community and the environment. So I just think it's a really cool. He's got a really good outlook on things, and I like the way that he looks at things. I think he rationalized the Amazon merger, which is funny to me, because he said he initially didn't want it to happen at all, but then he goes around in a circle and basically says it's a wonderful thing. But I think he's just rationalizing it. But I don't know. I don't think I haven't seen much of a difference. I shop at Whole Foods, and doesn't matter. My wife
right,
scans her little Amazon thing, and supposedly we get a discount, but I don't know. So
right. Same quality of food, I guess, right?
yeah, good point. Good point. And we're recording this on a Friday before the Chiefs Bengals. So do you have a game date? Now, this is going to air way after the show. So do you have a game date? Are the Chiefs going to win, or what are your thoughts on it? I'm a little nervous.
Yeah, I mean, you know, obviously as a Chiefs fan, I'm going to say they're going to win, right? I'm confident in their ability to win, especially after last game. You know, the thing is they did really well, and we were winning up until the last bit there, but we still powered through. I mean, it's crazy to see what this team can do, and I think anything's possible. I think we're probably going to win, but I'm going to be rooting for them, so we'll see what happens.
It scares me that the Bengals beat us. I'm scared because their quarterback is the other hot shot, just like Buffalo's quarterback was great. So, and that wide receiver just lit us up.
Right.
So didn't he score like 4 touchdowns on us or
Yep.
something?
4 touchdowns. I couldn't believe it. I saw that number at the end and I was like, wow, he went right through our team.
Right. So I'm just curious, are they going to continue with that same game plan, or if they're going to switch it up? But you're right. The Chiefs, I think after that 13-second drive, they're never out of it. So home field advantage is going to be a big deal. I think if our defense can shut down that quarterback and that wide receiver, we will win easily. I think Buffalo is better than the Bengals, and so I think there's I think we've got a really good chance, but it's the NFL. You never know. I mean, all these teams are good to get where they're at. They're legit. So
Right.
yeah, hopefully people are watching this and like, oh yeah, we won easily, and we'll be talking about the Super Bowl, but I don't know. We'll see.
Are you going to the game?
No, you know, I'm not. I used to have season tickets, so I used to be all about it. But I had season tickets the year we won the Super Bowl, and I, in fact, even got to go to the Super Bowl that year. So it's like you can't get any better than that. Like, how am I going to get better than that?
Right.
So
That makes sense.
and you know, I'm kind of weird on. I actually like listening to the commentators when they're good ones. Like I love Tony Romo, and I love Al Michaels, Jim Nance. So Jim Nance, Tony Romo, that's a really good combo though. And I like it when Al Michaels announces. So I like actually hearing their commentary during the game. I'm a little weird like that. So I don't know.
Sure. And I guess the best view in the house is going to be right in front of the TV, right?
Right.
So
Right. On my couch with my dog, Rachel there. What about you? Are you going?
I'm not going. No, we talked about it, but did not end up going. So I might be going to a restaurant to watch it. So we'll see how that plays out. But do you have a favorite like Chiefs food that you eat while you watch it?
We do. My wife makes this, I think it's lean turkey dip.
Okay.
It's got like vegetables in it and like some beans and turkey. And she like dips chips in it.
Sure.
I think I just eat it because it's good. It's almost like a chili, but it's like turkey.
Hmm.
It's really good.
You have to
we
bring
like
some.
it. What's that?
You have to bring some to the office.
Yeah, it never makes it. Like we eat it all, or there's one little dish left for Rachel for lunch.
Right.
But
That's
what about
good.
you?
Buffalo chicken dip. That's all-time fan favorite.
Buffalo chicken dip. Yeah.
It's almost that you have to eat it while you watch the Chiefs. So, which
Well,
I
good.
enjoy.
Well, good. Well, good. Well, I know that's about all the time we have for today. Jake, thank you so much for joining me on the show. We look forward to having you on future episodes. And thank you all for tuning in. And we hope you have a great week.
Thank you.